Corporate Finance, Excel, Practice Problem. In this presentation, we're going to work a practice problem in Excel related to financial leverage and earnings per share, taking a look at a few different scenarios as we increase the earnings and seeing the effect on the earnings per share with regard and related to the leverage or the debt within the company. Get ready. It's time to take your chance with Corporate Finance. Here we are in Excel. We have our information on the left-hand side. We're going to put that into the blue area into our worksheet on the right-hand side. We're going to have a couple different scenarios, scenario A and B, and then we're going to take a look at different earning levels related to those scenarios. Now, A and B scenarios will be debt-focused and then equity-focused. So let's take a look at A first. We're going to say the debt is going to be at the $300,000. We're going to say the equity is going to be at the $540,000. This is basically our accounting equation because the assets then are going to be the debt of the $300,000 and the $540,000, that adding up to the $840,000. That'll be our assets. So assets equal liabilities plus equity. $840,000 equals liabilities, debt $300,000 plus equity $540,000. You can see the emphasis here being on the equity side of things. We can make that kind of yellow for our emphasis. On B then, however, we have the opposite. So now we're going to say that the debt now is going to be at the 540. That's where the emphasis is going to be, whereas the common stock now is at the 300,000. Those still adding up then to that same 840,000, but now the emphasis being more on the debt side of the equation as opposed to the equity side with regards to how we're financing those assets. Then we're going to take a look at the earnings before interest and taxes for three different levels. That being 30,000, 65,000, 90,000. Tax rate is going to be straight 10%. Let's first consider what our return is going to be on the earnings before interest and taxes, the return on the assets that we'll have under either scenario, those assets under either scenario being equal to that, these two items, the 840,000. So let's consider, we're going to say the earnings before interest and taxes. We've got three different scenarios for the earnings. We're going to say that that's either going to be scenario one, what happens if we have the 30,000, what's going to be our return, and what happens if we have the earnings before interest and taxes of the 65,000, and then what's going to happen if we have the earnings going up to the 90,000. Then we're going to have the total assets. The total assets then are going to be here. That's going to be equal to either scenario is going to be the same. Either it's more debt finance or equity finance. For A, it's more equity finance, but we have the debt of the 300,000, the equity of the 540 for the 840,000. That's going to be the assets. Assets equal liabilities plus equity. On B, same number end result, but now debt being more the focus, equity being the 300,000, still at that 840,000. So whichever ones we add up, I'm going to say it's going to be equal to the 300,000 or the debt and the equity. You can do it this way too. For scenario, it's going to be the same two numbers, whichever way you do it. But the bottom line is the assets are going to be that 840,000. So under either scenario, A or B, if we take a look at the earnings before interest and taxes divided by the total assets, which is basically our return that we are considering here. Let's see if I can get the name better. I'm going to say it's going to be the return, or earnings before interest and taxes divided by the total assets is going to be our return that we're going to have. That's going to be the 30,000 divided by the assets of the 840. Let's go ahead and make that a percent. Home tab numbers, making it a percent, adding a couple decimals, adding a few decimals. We could keep going. Going to stop at 2. I'm going to go ahead and underline this whole thing here. So I'm going to select these three cells, home tab, font group, and underline. Then I can do the same thing here. This is going to be the 65 divided by the 840. So now our return on a percent basis has gone up. Home tab numbers, percent, increasing decimals. So now we're getting a return of the 7.74%. One more time, the 90,000 divided by the 840. Home tab numbers, percent, increase in the decimals. Now it has gone up to a return of the 10.87 on the assets. So we're getting a return on the assets, which is of course increasing as the earnings before interest and taxes, basically our net income before considering interest and taxes, is increasing. So now let's consider this in terms of I'll do an earnings per share calculation, which means we're going to start off with kind of like an income statement type of calculation at the point in time that we have the earnings before interest and taxes. So we'll start off with this line item. And then we'll go from there to consider what the differences will be with regards to our earnings per share calculation. So we're going to start off with, and we're going to be focusing in on scenario A now. And then we'll do the same thing for scenario B. We'll do that over here in the second worksheet, which should be scenario B. Let's change that right now before I get confused. Scenario B will be on the right. So now we're focusing in on just scenario A. We're going to be calculating the earnings before interest and taxes. I'm going to do that by saying equals, pulling up the same number up top. We're going to have the same three scenarios, same three starting points. The 30,000, I'm going to say equals that number. I'm then going to copy that across using the autofill, putting my cursor on the autofill handle, dragging across. Then we're going to be picking up the interest. So I'm going to say, all right, now we have the interest. And the interest now is going to be for this, all three of these, is going to be the 300,000 times the 9%. So we're going to be picking up, all right, 300,000 times 9% is the interest. Now, I typically go to cell 2 instead of making absolute references. You could make absolute references of these two and then copy them across. I oftentimes will go to the second cell and say equals that cell, and then you can copy that equals, and that'll make another, equals autofill across. So either way that you want to do it, there's pros and cons to either one, but that's how we'll do it for now. And then that's going to give us the earnings before taxes. So if we subtract those out, we're going to get the 30 minus the 27. We have a loss in the first, I'm sorry, we don't have a loss. We have the 3,000 earnings there. Then we have the 65 minus the 27. And then we have the 90 minus the 27, Put in an underline there. Obviously, as the income goes up, we're after tax income increasing as well. Home tab font group, underline. Now we're going to be considering the tax. The tax rate we said was 10%. So we're just going to take that 3,000, I'm going to multiply it times the 10%, which was all the way down here. I want to make that an absolute reference so I can simply copy that cell across, but not move the cell right above it. Therefore, I'm going to make this an absolute reference, selecting F4, putting a $sign before the B and 27. Then I'm going to put my cursor back on it, autofill handle, drag that across, filling it across. Then Home tab font group, we'll put an underline here. That's going to give us the earnings after taxes. The earnings after the taxes then are going to be equal to the earnings before the taxes minus the taxes. Let's go ahead and copy that across. Control C, holding down Shift, right arrow, Control V, and pasting that across. That's going to be our earnings after the taxes. So obviously the earnings going up. Notice the tax is going up as, of course, the earnings are going up. So the taxes are kind of distorting kind of figure because they're going to be basically increasing just with the net income increasing. Now we'll consider the earnings per share calculation, which we're going to need the number of shares. So the number of shares outstanding for scenario A was 54,000 shares, right? We got 54,000 shares at $10. That's how we got to the total equity of the 540,000. So we're going to be picking up then the number of shares. Now that doesn't mean the number of people or owners in the company. It just means that because one owner could have multiple shares, but that's the unit shares that are out there that have been distributed. So then if we then equals across, that's going to give us the earnings per share, which is going to be equal to the earnings after taxes divided by the number of shares. Let's add some decimals. Home tab font group, add a few decimals there. We could keep going. I'm going to stop at 2. Looks like it's even. And then I'm going to put an underline. Let's put an underline on these 3 cells. Go into the Home tab, font group, and underline. And then I'm going to go ahead and drag this across with the autofill dragging this item across. So you can see then that obviously if we start off with the lower earnings before interest and taxes, we're going to have a lower earnings per share. So the earnings per share is at the 5 cents, and then it goes up to the 0.63 and then the 1.05. Now what would happen, let's see what will happen if we take a look at scenario B, which is less which is more leverage, meaning it has more debt as compared to the equity, even though the total assets are the same. So we have the same return on the assets being the same up top, and we're going to look at the same income levels regarding the earnings before interest and taxes, and then the difference being the way we're financing the structure of our assets now being focused more on the debt. So let's do the same kind of thing here. I'm going to start with, okay, earnings before interest and taxes, we're going to have the same top line number of basically our income statement. That's going to be the 30,000. Let's copy that across. I'm going to say Control C, hold down Shift over 1 on the arrow, Control C, or Control V. Now I did it. Control C, hold down Shift, and Control V. And then we're going to be picking up the interest now. So the interest, if I scroll on over to the right, we're going to say on scenario B, we now have the interest of the 540,000 times the 9%. So the interest is going to be higher now, so that's going to have an impact, of course. So we're going to say now we've got the 540,000 times the 9%, because more of it's financed by the debt. And that's going to give us our 48.6. I'm going to say that's going to be equal all the way across. And then I'm going to copy that, paste it to number 3. I'm going to put an underline here by going to the Home tab, Font Group, and Underline. This is going to give us our earnings before taxes. Subtracting this out, this is going to be the 30,000 minus the 48.6. I'm going to copy that, Control C. Going to paste that across, Control V, pasting that across, and then we'll pick up the taxes. So the taxes, which are going to be 10%. Now this is a loss, and you might say, well, what are they going to do? Is the IRS going to pay us? Now, if they're not going to pay us now, but if we can carry the loss back to a prior year or into the future, then we could take advantage of the loss. We could basically get paid on the loss by taking it against income. So we're going to assume that yes, we can take advantage of the loss, not by basically carrying it back or carrying it forward. So I'm going to calculate the 10% on the loss because we're going to get a tax benefit from the loss. So this is going to be the 10%. So that means that's actually going to decrease the loss. So if I then have the earnings after taxes, then it's going to be this loss minus the negative taxes, which is going to give us the 16,740 decrease in the loss, because once again we will get a tax benefit is our assumption there. So then I'm going to take the same thing. I can copy this one across now. Well, actually I cannot. The second tab, the second number is that 10%. So if I want to copy it across, I have to make that an absolute reference. So I'm going to put my cursor on that B27, hit F4, $sign before the B in 27. Then I can copy it across, Control C, holding down Shift, right arrow, Control V, and then I'll double click on it to see if it does what we expect. Taking the number above it times that 10%. That's what we expect. It's what I expected at least, so that's good. I totally thought that was going to happen. That's what did happen. That's good. So then we're going to put an underline on these three. Home tab, Font Group, Underline. And then I can copy this across, which will subtract out the earnings before taxes minus the taxes. Auto-fill that across. So there we have our earnings after the taxes. And that's going to be our bottom line earnings number. So we have a loss on the first item here, of course, that resulting from the increase in the interest so that we had to pay due to us financing more with interest. So when we had the lower income, we ended up with a loss, whereas over here, we didn't have a loss. I'm going to make this a little bit smaller so we can see this on one screen here. Is that small enough? Maybe a little smaller. So we had a loss here, and then as the income went up, we still have less earnings, but we have the positive on the earnings, and then we have the 37,260 positive over here. Again, still less than it was over here. But now we want to think about how to break that out to the number of shares that are out there. Because remember, if we finance with the number of shares, we're kind of diluting the number of shares. So if we break this down to a per unit component, then the question is, well, what's going to be the earnings per share? We got a lesser amount of the net income or total earnings here. What's going to be the impact on a per share basis, however? So if we then take the number of shares in this one, because on this one, we only had 30,000 shares outstanding as opposed to the 54,000 shares outstanding. So if we pick up that 30,000 shares, then I'm going to say, now this doesn't represent the amount of people, but this is the number of shares, the equity shares that are out there. There's less of them. Therefore, we have to distribute the income over less, shares. So I'm going to then underline this. And that's going to give us our earnings per share. So it's going to be our earnings per share here. Let's divide this out. This is going to be equal to the 16,740 divided by the 30,000 shares. I'm going to make that add some decimals. Home tab, number, add a few decimals. Then I'll copy that, Control C, and then Shift right arrow and Control V, and there we have that. So now, of course, when we have lesser income, so our income was low, well, we have a loss here. That's going to obviously result in a negative earnings per share. As the income goes up, then now we have the 0.49 versus the 0.63. And then as the income goes up here, keeps on increasing, you can see that now we actually have an earnings per share that's higher as the income increases. So, and that's due to the fact that the more leverage that we have, if we have an increasing, if the returns are increasing in a period of increasing returns, you can see that we end up with this kind of a multiplier effect when we have more leverage in the company, the earnings per share then increasing. But if there's a decline, then it could end up in a a multiplier effect going down. So if we take a look at the change then in what happened here, what happened in the second period, the 0.49 minus the prior period, and I'm going to make that home tab font and increase some decimals here. We got a change of 1.05. If I then take this minus the prior period, then I'm going to go to the home tab font. I'm sorry, that's not what I wanted. Increase the decimal. So now we have a change of the 0.75. If I did that over here, I take the change 1.05 minus the prior amount, and then I add decimals, home tab, font group, and I increase the change. We have less of an increase here, right, than we have over here. And if I did that here, I'm going to say this number minus the prior period, add some decimals, home tab, font group, add a couple decimals, and once again, in a period of increasing times, earnings going up, the returns on assets going up, or the earnings before interest and taxes going up, you can see that we have this kind of, you can think, I guess, like a multiplier effect going up at a higher rate than it is over here. You can think of it the same way as if you saw the decline. If you think of it going from 90,000 back to scenario 2 and whatnot, you could see that the decrease that is happening could result in kind of a multiplier effect going down, in that we're going to be decreasing. When we went the other way, we decreased by the 1.05 versus the decrease in the earnings per share was only the 0.558. So once again, leverage can be somewhat benefit if you can predict the increase in prices, but there's risk involved with it as well. And when things go down, it could result in the negative as it goes down. So I'm going to put a change here. Change. Let's just say change. And I'll just do the formatting just so we can see this. Add this to our table. It'll be on your table already. Home tab, font group. Let's put a blue thing here. Let's put a home tab font. Let's put an underline or some borders. Let's do it on this one too. Blue thing, borders. Okay.